Hey traders, John Howell here. Hope you guys are doing well. In this video, I'm going to teach you about a momentum play. So if you're looking to use the scaling out technique, or you're looking to see, okay, if I'm in a trade right now, how do I identify a really good, how do I identify whether the momentum in the trade that I'm in right now is still continuing or it's not. So this is going to really help you scale out. My goal for this here is to help you identify, when you're in a trade, how do you know if the momentum in your trade is likely to continue or not? So let's get straight into it. Do not place a trade based on this video. This video is not giving you any advice at all. This is just giving you my personal opinion, what I'm seeing today. I have no idea what's going to happen tomorrow or moving forward into the future. So all trading involves with risk. Do not place a trade based on what you see in this video. This video here is just to educate you, to help you become a much better trader. Also, once you finish with this video, click the subscribe button, hit the like button. Also, the first link in the description, click on that. And I'm going to teach you the best trading strategy to trade in this high volatile environment. Alrighty, traders. So let me actually just talk to you guys about this here, about the momentum. And this here, again, guys, is really helpful and really powerful when actually looking at the actual market itself. So, and it's, again, guys, this is for when you're actually already in a trade. If you're in a trade, you're looking to use a scaling out technique, or you're looking to see where is the momentum in the markets, then that's what this is all about. So let's just say, for example, you got into, say, you got a nice little update here, so on and so forth. This is where you got into it, right? So you're like, then you're like, okay, so we're in this now. So then what? And let's say the market opens up here and comes up through there, and it gives you that day there. What is that day? Well, that day there is, let me just do this here. That day here is we have a low and we have a higher low. So we have a high low and a high high compared to yesterday's high. So you can see the high of today's bar or candlestick, whatever it is higher than yesterday's bar. And the low is also higher than yesterday's bar. So now we actually have an uptrend, right? So you can see the buyers are still pushing higher highs, higher low and higher low. What's the next day? Update through there. So what's happening here? The buyers are pushing higher low again. What about this here? What about if the market does that? Well, it's still a higher low. Still a higher low. And then suddenly what happens is the market then suddenly it opens. So it might actually open here and come down and close down there. So now what is this? This is now the very first break. The very first break of this is the very first break of the very first break of the of that, right? So now what do we have here? Let me just see if I can get the tool here, my tool to work here. So we have a higher low, a higher low, a higher low, a higher low, and a higher low. So you can see momentum is still pushing higher and higher and higher. And this here is the very first break of now it's actually made a lower low. This is where you see, so as long as it's making higher lows and higher lows and higher lows, that's where momentum is actually staying in that move, right? We're not using indicators. We're just saying, okay, this is where it's actually likely to go. We're looking at the higher lows there. And as soon as it actually breaks this low, that's where momentum is now starting to slow down. Same for the downside. If we actually look at the downside, let's just say, for example, we had a day here, and we had a nice breakdown through there, right? Let's say the market is doing that nice breakdown. So then we actually have a obviously nice breakdown. Just say we were in this trade here, and the market does that. So what do we have here? We have a lower high, right? So the lower high. What if the next day was doing that? We still have a lower high. What if the next day did that? Still a lower high. What if the next day did that? Still a lower high, right? So you can see, it doesn't matter about the lows. See, in an uptrend, the most important part is the higher lows, higher lows. In a downtrend, it's more, the lower highs is the most important part by looking at, again, gauging momentum in this move. So then we have that. So then what else do we have? What happened? And then suddenly what happens is the market opens. It opens, it rallies up and closes there. What is this now? This is a higher low. This here right now is the very first break of the momentum of the down move. So as long as you're getting this lower highs and then also higher lows, depending on if the bullish move and a bearish move, depending on the move. That's what's going to help you there. So there we go, guys. There's a bit of education for you guys to help you gauge when you're in a trade. This is how you gauge the momentum in the actual markets itself.